Welcome to the video version of the Wagner Daily for January 10th, 2020. This is the first video version of the report in 2020, so Happy New Year. And moving forward every Thursday night, this video will replace the written commentary portion of our report, and hopefully it serves as a nice change of pace from our usual report, as well as gives some insight as to how we set up our charts and what indicators we use. We're going to quickly go over a few broad market averages, then we'll dive into current open positions in the model portfolio, and then go into what is out there in terms of new setups over the next few days. All right, let's get to the charts. We're not going to waste too much time on broad market averages. All in a strong uptrend. The NASDAQ Composite, S&P 500, IWP, which is the growth, mid-cap growth, looking strong. And interestingly enough, we have FFTY, a little bit of a false breakout yesterday with some nice follow-through today. So that's a positive sign. The FFTY represents the IBD can-slim style of trading, which is what we tend to focus on in this report, which are growth stocks with momentum. Generally, those are stocks that are small to mid-cap. Some of them are larger cap. So FFTY moving up is a positive sign for our style of trading. As far as open long positions, we have SHOP. We've been in SHOP since, I believe, around 12.12, around 374. We're up about 15%. YNDX, I believe we're long from around 43-ish. It's now beginning to follow through to the upside. Positive sign there. SC, we're long from around 38 with I think a 38.46. We're up about 5%. IPHI, we are in from 77. Nice fall through so far in volume. And I'm running through these open positions pretty quickly because I want to get into potential setups and a mini lesson on buying off lows after a shakeout. RETA, we're still long from a pullback entry here to the breakout pivot around 211, which failed, but our stop was down here. I believe I moved the stop up to 197 in tonight's report. AMAT, which triggered on Thursday, failed to fall through, pulled back into the 10-day MA and held, which is a pretty good sign. I think overall it's not an ideal trigger in that it just probed above the entry point and immediately sold off. But as long as it can stay above this 20-day EMA, I think it has a pretty good shot of moving higher. DOCU, we're long from this entry here around 76. Bit of a disappointing day today following yesterday's move. What it needs to do is pretty clear. It has to break above 77 and hold while staying above the 20-day EMA. TDOC, we bought, after this big day up, we bought on a pullback to 85.70-ish. I think it looks fine as long as it stays above this uptrend line. And hopefully it can find some support if it continues to pull back in this 84.80 area. And then we have DT, which was a pullback entry, triggered today around 28.80. Strong breakout above the prior high or swing highs. One day of heavy volume selling action. Not as much as the prior update, though, which was a good sign. And then there was a pickup in volume here on 1.8, but there was a bullish reversal candle. And today's volume was extremely light, so that's a positive sign. So we look for the price action to hold above the 10 and 20-day MAs, the short-term uptrend line, and the prior pivot. So 27 has quite a bit of support. And onto potential setups, we have DDOG, Datadog, which we probably should have been long over this downtrend line, and tight action here after 2 bullish reversal candles that held the 50 after a really bullish reversal 12.11. We did miss the breakout above 38.50. However, DDOG has formed a little mini bull flag here after a dip below the 50 MA. So I believe it's buyable above the 3-day high. We also have a pullback entry just in case it pulls back into the 10-day MA around 38.80. We're more than happy to enter there, and then we could place a loose stop, I think around 7 or 8% away beneath the recent swing low. And next up is Lscc, looking pretty good on the daily chart and the weekly. Great volume this week so far. Big pickup in volume over the past few weeks. Basically is the biggest volume spike in past 3 months, and depending on tomorrow's volume, could climb above the volume from 11.1. So pretty strong price and volume action this week. That being said, if we were to enter around 21.18, it'd be tough to put a stop anywhere above the 50-day MA. So that's 8% away. So our stop we're probably looking at is around 11% away. So if we can get some sort of pullback to this 2070 area, that would give us about a 9.5% stop, or at least below 10. Generally, I like to have stops in the 4 to 7% area. Also looking pretty good is TXG for a swing here. Pretty explosive price and volume action on the breakout after a nasty shakeout below the 50 MA. And so far it's been an orderly pullback. It's digested the sharp run up. I mean, it was about a 60% run up in a few days. So if it can clear Thursday's high, then the uptrend may resume. And we'd probably place a stop somewhere in the 70-20 area. And as promised, I'm going to go over some bottoming-like patterns after a shakeout. So something along the lines of MKSI, you have a dip below obvious support, but the price action doesn't fall apart and immediately recovers back above. Generally, if there's some sort of tight trading range, you can enter above that 2 or 3 bar high, especially when there's a reversal candle involved. Lscc is a pretty good example of that, though it didn't waste too much time. It did bounce back, but it was a little bit more wild price action. We can see the break of this downtrend line or over this 20 area, and it took off. But the catalyst for this recent advance was everyone getting washed out, including us. I mean, we had a stop in this area here, and I don't necessarily think it was a terrible stop. I think it was a higher stop because we got in at 20. Had we entered closer to this 1925 area here on 12.11, then we could have placed our stop down here. But we did enter closer to 20, and I felt that was just, I guess it was 9% away, but at the moment I didn't feel like I wanted to go that low. So our stop was probably around this 1890 area, which got clipped. The next few days it held, reversed, and then ripped higher. So another good example of this would be MANT. You take out a few days of lows here with the bullish reversal candle on the open. This type of candle, if the price can get through the high here, could lead to a sharp recovery. Same thing goes for UCTT, sort of like MKSI. There's no reversal candle here, but there is a breakdown below an obvious support level, and the price action stays around. So it doesn't really fall apart, doesn't rip, but it's just chop around. So if it can punch back through 23, I think that would catch many off guard, especially those who are stopped out beneath this swing low in the 20-day EMA, and that could lead to a strong rally. And IPHI is a pretty good example. A while back when it gapped higher, there was an undercut. So you have a breakout here to attract some longs, and there's just an ugly pullback. That's just too many down days in a row. Then a slight bounce and then more selling. And it goes to undercut the low of the gap up day. 1 day undercut. And then it bounces for 2 days and pauses, and then the 2 more tight days. So you have a tight range here. Downtrend line break over the 2 bar high with about a 6% stop. And that sort of stop distance is fine. It's never going to be much lower than 4 or 5 because there's usually some sort of reversal candle in there. A bit more volatility as it's a shakeout candle beneath an obvious low. So as long as it's in that 4 to 7% range, it should be good. All right, thanks for joining me tonight. Have a great weekend, and I'll talk to you next Thursday.